Hi, everyone. Thanks for joining me for the October update. It's a fair way into the month as it's turned out. Um, Look, I'd like to welcome a few of you. We've had a few more dial in today. So g'day to the likes of Luke and Ned and Robert, Victor, and KA. Thanks for tuning in. I'll be having a good chat about AF Legal shortly. Some of you may have seen a fairly good announcement from that company this morning. But just reflecting on October, first of all, you would have seen perhaps the monthly report that we get up on the website by the third of each month now. And in October, we managed to put together a sixth straight positive month of returns, albeit only 0.7%. And that was in the context of that actually beating the ASX 200, but behind the small ordinaries, which is boosted by some fairly frothy moves, especially in amongst some of or benefited at least to some extent with some mining companies and rare earths in particular. It's been a weird month so far in November. The small ordinaries, after having a very good run, was down almost 4% a couple of days ago. There's been some real froth come out of some pretty insane growth companies. A classic one being a company called Drone Shield, which had gone along to an insane sort of valuation of $3 billion, but rather cynically, a lot of the owners and management sold out sharply, and that crashed 30 something percent today. So we're seeing a bit of choppiness this month. We've been fairly immune to that. Some might say boring, even the way our fund is structured, but it's always been my claim, I suppose, that when the market does pull back, if it does pull back sharply, we would generally do better. So some of that's starting to play out this month. Last month, one of our overseas, we have very few overseas investments now. We've got two, and they're small positions, two companies in Italy, which we have held a long position in, which have done reasonably well for us. And we've got four New Zealand companies, which have mostly done quite well for us. And we've got one UK company called Aorema Communications. It's a very small company, but I'll let you look at that up, and I'm happy to answer any questions you might have. I'll just remind you now that you can, put some questions in the chat or the Q&A box, and I'll come to them during the call. So that did really well for us during last month. Another one which did well last month and has done really well for us this month so far is Verbrek. So Verbrek's an engineering company that provides asset management to all sorts of areas, mostly oil and gas, perhaps defense infrastructure, water infrastructure. It's one where we took a large position in a placement at 6 cents last year, and we've maintained that. We actually bought a bit more this month after they made a really good acquisition. They bought a subsidiary, a very small subsidiary of Telstra. It's a sort of classic Telstra story where, they bought this company for $40 million a while back, and then they've sold it for $5 million to Verbrek. And it's one where, the sort of better management focus from Verbrek will be able to take that company, integrate it, get some really good synergies. Actually, real synergies, not just for the sake of that buzzword. And it's done really well for us again this month. So very happy with that. Against that, we had Austin Engineering, which is a company that put out a disappointing update very late last month. And the other two detractors, which we had there, Fiducian and Kit McGrath, really fell on the back of no particular news. Fiducian has a bit of a stoush with ASIC on the back of a claim that they had put a fund out that was greenwashing, as the term goes. I won't bore you too much with that, but you can look it up. We're confident that is not something that's indicative of wider problems in the business. I've got sort of high trust of fiducian, and um, that had actually been, that news was out in the previous month. So, that just moves around because it's fairly illiquid, but we're confident in that over the longer term. It kept falling early this month. We bought a little bit more, and in the last 2 days, it's bounced quite sharply for us. So look, steady as she goes last month. We're going okay again this month so far. The market's down. We're flat so far for November, not including today's results, which I'll talk about in a sec. One admin thing I'll talk about quickly. We have finally got all of the materials back from our accountant. I've started sending out the distribution statements to some investors, and I'll get the rest of them out by the weekend. I'll send a detailed update in relation to this issue. It crops up occasionally. Uh, you don't really need to take any notice unless you want to of this. At 30 June, when I calculate the unit price, I have to basically estimate what I think the distribution is going to be. It's never exact. Mostly I get it pretty close. This year, you might recall that we sold one of our unlisted positions in Nebulor. That was sold last year, but we received a significant payment this financial year, in October. The back and forth with the accountant has been to the effect that we have to recognise the whole amount as a capital gain in FY25, which I hadn't taken into account when I was estimating the distribution. That means that the distribution is much larger than I was expecting, it being my policy to pay out all of the earnings in a particular year. As a trust, you're taxed on the earnings regardless of whether I pay it out. So I do pay it out. That means that the distribution was 9.1 cents, not 4.7 cents. The upshot of that is that everyone got more as the distribution, but that means the actual unit price will come down by the difference being 4.4 cents difference. So I'll explain what, and I provided, set that out in quite some detail in a note when I send out your distribution statement. The net effect is zero. It's just a case of how much you get paid out, which was perhaps more than was being expected. The main thing I want to talk about and focus on, and very much open to questions on this, is something that's been a focus for and a source of frustration for years now for us, and that is our position in AF Legal, which has always been on that table we print each month as one of our larger listed positions. So AF Legal is a position we took probably 4 or 5 years ago. Ultimately found that it was being very poorly managed. My background as a lawyer meant that I felt that it was a company that I could perhaps have some more insights into than I perhaps do in other areas. I dove in to this when it became clear that it was being poorly managed and we had a fairly significant position. What we found was quite concerning ultimately. And I took steps to change the board and ended up taking a position on the board myself with the support of some other major shareholders who I'm very grateful for: DMX Capital, a really good Sydney fund manager, and Moat Investments, which is owned by Cyril Jinks, a Brisbane stockbroker here. They're two major shareholders, still are, and supported my position on the board. That led to a change in the executive. We brought in a really good CEO, Chris McFadden. He'd previously been CFO at a company called Ashley Services and had led a turnaround there, and had gained the trust of a number of microcap investors. That's been a process that's taken now 2 years, where Chris and I have been working really closely together. I spent a lot of time on this company, far more than I probably want to. And my overall approach to the fund in the last 18 months has been to move away from unlisted positions, move away from positions where I was having to get too involved personally in the running of the company. And I think we've successfully done that. AF Legal is the last sort of one where I do involve myself a lot. And partly because like being able to see behind the scenes that things have been improving incrementally, bit by bit. It's been a really tough job because the morale in the company was in you know below the floorboards when we came in. It had been micromanaged from a centralized approach where various companies have been sort of plugged in a fairly cynical private equity style approach of buying up practices, trying to spin the EBITDA numbers to the market without actually properly integrating those companies, and where fights and litigation have broken out about how exactly those companies have been plugged in the last 18 months to 2 years. Chris has done an excellent job with our CFO and COO, Stace Boardman, and a great chair in the form of Rick Dennis, who is a former EY partner, in fact, a head of EY in Queensland. He's on a number of boards and has been a great supporter. And on the back of that, morale has basically, through Chris's approach to running the company, steadily improved. And it's been a leap of faith because the natural inclination when you come in and things aren't going well, you need to make money, you need to turn it around because the balance sheet wasn't great, is to take a stick rather than a carrot approach. If lawyers are underperforming, you really want to, get worked up and beat them into doing better. It was very clear that that approach had been adopted and just doesn't work. The practice areas we're in, family law, criminal law, and contested estates, are very different to where perhaps a lot of our investors and others in commercial law might be used to. So we're not junior lawyers, and most lawyers for that matter don't come into these positions with any great expectations or motivation to work extreme hours for limited pay in the hope or expectation that down the track they'll be a partner of a large firm and the riches will come. There's a lot of different things that motivate the lawyers in these areas. They're great practice areas to practice in. They're also very stressful in some ways. But ultimately, what we have found, and it has worked, it's been plenty of worry over the period, but it has worked. People, there's a certain cohort of really good lawyers who are not interested in running their own company, who just want to go to a place of work where they're respected, they have great colleagues, they have some better career paths than they would in the small firms who make up our competition in those areas. And that they're paid not at the top of the market, but well. And they have the support of a bigger organization that feeds work to them through fairly sophisticated, certainly way more sophisticated than our competition, marketing and administration operation. And we're just beginning to see that concept is really working in these areas of law, family, criminal, and contested estates. I'm not sure there's that many others that we can go into, because the key things about those areas are that they, as I say, have competition that are not big into town, are not sophisticated, don't have large marketing operations. Even something like private personal injury, which we would never go into, has large firms with sophisticated marketing, but the other three don't. So we really are sort of a first on board to try and create something of scale in this area. And the idea that it should be able to work is really starting to come to fruition. And there are other reasons it should work, and why I don't think the listed option is going to work for commercial firms, is that the lawyers themselves don't build up practice areas of clients. If you go to a large, even the biggest firms, the clients generally come and stay for the lawyer as opposed to the brand. And so the problem with that is that lawyers can sort of take a whole bunch of clients with them and move off to somewhere else. And it's very hard to keep them. They have a lot of power in terms of their ability to demand salary increases or to negotiate their position. The areas that I'm talking about, criminal, contested estates, and family law, generally don't see repeat clients. They do sometimes, of course, but not enough that a lawyer is necessarily going to build up a practice based solely on the retaining clients. Their practice is built around either their personal reputation, and that requires a certain type of lawyer, a type of lawyer who is sufficiently outgoing that they love doing business development, they love putting themselves out there and building a personal brand. And some of those lawyers, great, they'll always want to run their own firm, but the vast majority of lawyers just want to practice law in those quite interesting areas, have good work supplied to them. And on the back of that, you can build a business based on brand, based on really good treatment of lawyers and respect for the lawyers and fair profit sharing between shareholders and the lawyers. And you can build a business based on really sophisticated marketing and the highest quality of administration. And an example of that with AF Legal is that we're spending a lot of money currently putting in a new practice management system, which really will be of the highest quality. Will match the big end of town firms, and not something that too many other smaller practices that make up our competition can manage. Our competition tends to be 1 to 4 per partner sort of firms in those areas. And look, the other thing that I think is relevant and why I'm a big believer in this business model, why we have invested and why I put so much time into it, is that the having outside investment, which is something that's criticized sometimes in this area of law or in law generally, allows the business to be forward-looking, to take 5-10 year approaches to building a business, building a brand. Now, that can absolutely happen in other areas of law. In the big law firms, it happens because the partnership is so big that they can afford really sophisticated marketing. But in our competition, the financial motivation of a partner in a 1 to 4 person firm is to just make sure they keep getting paid each year to generate. There's no necessarily incentive for them to build a brand or to build something that's going to be long lasting beyond them, because the reality is that the out for those lawyers is to sell, if they can, some equity to a partner who might come and take on their role. But in many cases, the reality is that those businesses can't and won't build up a sufficient brand. And so the focus is on, how do I make money this year? How do I make money the following year? There's just not the motivation to build a bigger brand because the scale is not possible unless you sort of take the leap of faith that we have. I mean, that is why there's no national firms in these areas. In family law, there's some bigger players like Lander and Rogers, but certainly in crime and contested estates, there's none. And so that's something where I feel that if we get it right, we can really be miles ahead of the competition. No one else has really followed in our footsteps so far. And all that leads me to the reason I'm quite effusive about it is there was an announcement out this morning, some of you may have seen to the ASX, which was a first quarter update for AF Legal. And it was really well received by the market, as it should have been. It was our best ever quarter for, by miles, for revenue. And for the first time, I think investors really saw that revenue is not just rising for the sake of it. It is flowing through to the bottom line, and it's flowing through to the bottom line in a way that's showing real leverage, i.e., that it's the profit before tax is rising at a far greater level than the rise in revenue. So revenue was up, around 40% year on year, whereas profit before tax was up 110% year on year compared to the first quarter last year. Um, Now that benefited a little bit because the criminal team wasn't in the prior period, but we are continuing to see really good revenue growth and with an absolute focus on ensuring that as we go, that is falling through to the bottom line. So I think that was the first quarter after a long, frustrating period for both me and many of our investors and I thank them, they've taken a leap of faith. Some of them are on this call. Victor is Victor Belkov runs a fund in which we're invested, but he also, through his fund, is directly invested in AF Legal and has been a great supporter of us. And hopefully, he's pleased with the update today when the stock rose about 25% on the back of today's announcement. Look, it's going to be rocky. Dealing with a people business is messy, but for the first time, we're really attracting great lawyers without having to, try as hard as we were in the past. They're coming to us. They want to work for us. It really comes down to the word of mouth. The lawyers that are working in there are by far the biggest source of other lawyers. Are they telling other lawyers that it's a good place to work? And that, for the first time in the last 12 months, has been the case. So, for the first time, we've been able to hire a whole heap of really high. Well, we've always been able to hire high quality lawyers. We've now been able to do it at a faster level. And the key thing is they're not leaving us. So our staff turnover in the professional level is the lowest ever. And that's the real key to things, because when a lawyer leaves, it takes you probably lose around 4 months of earnings basically from a new lawyer having to be found to come on, take those files on. The new lawyer can't necessarily charge when they're getting up to speed on these new files, yet of course they're being paid. So that turnover in the past had been chaotic, and when morale was low, it happened at a way too high level. The tangible benefits of taking a people first approach, as Chris calls it. I mean, that's the type of phrase that you think, well, that sounds like bullshit, but when it's actually practiced every day, when there's when you do things like ensuring when lawyers leave, you don't chase them for outstanding, a few $100s, or you don't try and claw back training costs, which have been happening in the past. You genuinely, wish people well, hope they do well. When they go to the bar, you brief them. Uh, you support people when they're having personal crises. Which is hard to do because it costs money, and when things aren't going well, it's a hard thing to do. But we did that, and it's really starting to pay off in this tangible way of lawyers wanting to work for us and staying with us. And we have great teams, and I encourage you all, if you ever know someone that needs help in a criminal or a family law or a contested estate matter, challenging a will, that get in contact with me, because I can say honestly, I would, in my own case, if I had any of those matters, go to an AF legal lawyer. We have the highest quality lawyers in family law. We have absolute guns in criminal law in Brisbane, Sydney, Canberra, and Melbourne now, like really high quality. And as a former criminal lawyer, I have the option of referring people to my former firm, Gilshan and Luton in Brisbane, which I have always done. But I would absolutely go to our Brisbane lawyer, Bree Bullock, now, because she's absolutely the top notch, and would I would go to her in an instant. So look, get in touch if you've got any matters. Have a read of the announcement, the first quarter announcement. It's there's one-off costs to come for the rest of this year as we implement the practice management system. FY27 is set up, I think, as a year where we won't have these one-off costs, where the underlying profit will continue to improve. And I think that's when we'll really start to attract more and more market attention. At the moment, it's really sort of niche microcap funds and individual investors who are seeing that we're making this this initial progress and have seen it. The announcement today, I think, will get us a bit of attention. It'll be a slow burn until people, see at the half year and full year that our cash and our balance sheet are strengthening in line with profit. But the process is underway, and I'm very excited. After sort of having to convince people that we're working hard and things are coming good for a long time now, knowing that the actual numbers are always 6 to 12 months lagging behind when you can see the underlying mood and the underlying recruitment. Today's been a great relief to be able to say to the market, look, here's some tangible evidence that it's actually happening, like I've been saying. So AF Legal, Westferry, we are the largest shareholder. We own 15% of AF Legal. It will help us with our results this month. And we're in no hurry to sell any. In fact, if the price comes any lower than its current 15 cents, I'll probably buy a little bit more. We, due to my role as a director, weren't able to be in the market today. We have to wait 24 hours after after an announcement like today before we can buy, but we'll see. I think it's probably at 16 cents where it closed today to 18 cents is a fair price. So it fell back to 14. I think it's really cheap, and there's great prospects for it to do really well over the next year to 5 years, as long as you can stomach a bit of choppiness, because it won't be a straight line by any means, but in 5 years that will be a really significant company in my view, and competition just won't be there to follow us. I mean, I know how hard it is to get one of these things underway. So there's the ability of competition to follow us into these areas is limited. So look, has anyone got any questions on AF Legal? Follow it, jump in if you want to in terms of buying some of your own shares. But as a Westferry investor, it's a really significant position for us. You'll benefit from being a Westferry investor in this really good company. So look, I don't think there's any questions there unless I'm missing anything, but that's what I wanted to focus on today. As always, send me an email if you've got any other questions about the fund. I'll get for those who haven't already received them, I'll get the distribution statements out to you by the weekend. And for those that are reinvesting, that'll have all the details of your reinvestment and the new issue of units. And then when I send out the November report in early December, I'll just do a bit of an explanation of reconciliation of that unit price and why it's changed because of the difference in the estimate of the distribution. All right. Well, thanks very much for joining me. I'll put this up on the website as usual. All the previous video calls are up on the website. Thanks very much for your ongoing support. All the best.